What is going on, everybody? Hopefully, guys are doing well out there. It is Friday. It's time for some weekend fun. And it's also time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we had gigantic news. You had, obviously, new announcements and new chips coming out of NVIDIA. But the biggest news of the week is that we got direction from Apple on potentially where they're going with their AI strategy. And it's a strategy that we've actually talked here about on the show before. Now, other note before we get into today's news, I'm recording this right around 1 p.m. Eastern time, several hours before the close. Figured this was a better trade-off than recording the video much later on tonight. Not wasting any time, kick things off like we always do with Meta Platforms for the week at $489.88. And like I said, I am recording this during the trading day. Currently, Meta Platform closing the week close to $506. Meta is offering to slash its subscription fees in Facebook to appeal and appease the EU. We talk about how our government, and certainly I'm guilty of it too, talking about how we got heavy hand regulation over here in the United States. Tell you what, the EU probably takes the cake. They're not only causing Meta to have a subscription model to their platform, but they're also controlling the price. Once €12.99, now potentially all the way down to €5.99 again after pushback from regulators. Moving on to Apple, so the week at $176.27, and the iPhone maker, it has just not been able to catch a bid all year, down 2.35% this week. Finished the week close to $172 per share. Year to date, you're down 10% on Apple, but we've got direction from Apple potentially on where they're going with their AI strategy. They're in discussions to potentially allow Google's Gemini to power its iPhone features with AI. They've also been reportedly in discussion with OpenAI as well. We talked about this on the show. This is something that we've actually discussed, that we weren't sure if Apple was going to go their own direction, make their own LLMs, make all the AI themselves, or if they go the direction kind of like the default search engine on Safari. Instead of building your own search engine, just allow Google to pay for the right. Now, inside of the story, they're talking about how Apple's going to license the technology from Google or license the technology from OpenAI. I gotta imagine Apple is coming to the table looking to get paid. They're not looking to pay Google. And in fact, if Apple ends up paying a company like Google or Microsoft for AI access, I think that's incredibly bearish for the stock. I think incredibly bullish for the stock if Apple pairs Google against Microsoft and they both come to the table with tens of billions of dollars to offer up their AI to be the default on Apple's phone. Because let's be real, Apple is very good at a lot of things. They make great handsets. They have nice cameras. They have a nice form factor. The software is good. They make really good computer chips and other components that go into the phone. And all of these things are needed with AI. You need good speakers. You need a good processor. You need a good camera. You need good hardware to run good AI. And so Apple is bringing a lot to the table. I hope they don't pay Google or Microsoft for the right to run their AI system. This should be like a Safari deal where you're the default search engine and you make Google figure out a way to make money on it. We'll see what ends up happening here, but it gave us the first clear indication that Apple actually probably doesn't have a firm strategy to develop AI in-house, and they're probably going to have to look to other companies which are experts. Now, they are also in talks with China's Baidu to get an AI model for its devices that it sells in China. The China market, obviously slightly more complicated. You potentially might not be able to run a large language model that's trained on data here in the United States in a country like China, which is more or less under communist rule. You've got to get a Chinese company to develop a censored, if you will, or a toned down AI model that doesn't make the mistakes like maybe a Google Gemini does or anything that embarrasses the Chinese government. We've got a partner there. So that could be part of Apple's strategy as well, is, hey, look, they could develop their own AI models, but man, they'd have to develop one here in the United States, and they've got a big product, obviously, in China. They'd have to develop one separately there. So maybe a better plan is partner with Baidu or one of the tech companies in China for AI there and then partner with Microsoft or Google here for AI. But the bottom line is Apple has got to turn this into a revenue generator. They can't just simply take Google's AI and license it from them because, look, Google's good at making handsets. Baidu's good at making handsets. All these companies can make a handset these days with a camera and a microphone and a screen on it. They've got to turn this into multi-billion dollars worth of net income. And we'll see if Tim Cook's able to pull it off. Now, he's in China again, meeting with suppliers as the sales pressure in that country continues to slide as you've got a lot of competition and economic pressures as well on the consumer in China. Apple was sued by the Department of Justice in a landmark antitrust case. The DOJ is coming to the table saying that Apple is violating the Sherman Act, saying it's using its iPhone to prevent other companies from offering competitive services such as digital wallets and other digital payments. A lot of this stems to the App Store, where Apple has its own proprietary payment system on there. And then also, if you're a dating app like a Tinder or something like that, think about it. Every dollar that goes through Tinder, 30% of it goes to Apple. What a great business that Apple has in that case. Also, if you're here on YouTube and you're watching somebody live, you're watching one of these live streams and you do a super chat and you donate money. Well, the crazy thing is if you're doing it through an Apple phone, they take 30% off the top, and then Google takes another like 60%. So for every dollar that you donate to your creator, they see like 20 cents of it because the big tech giants gobble up most of it. We'll see what happens in this case. My guess is the DOJ probably going to come out ahead on that one. Moving on to Amazon, start of the week at 176, and we said the e-commerce giant at the beginning of the year, one of our bold calls was that Amazon would overtake Apple in market cap. And I tell you what, we're getting closer and closer every day as Amazon was up by about 1.5 this week, finished the week close to $178 per share. Again, we're recording this with several hours to go in the trading day. FedEx and Amazon are reported to have talks again after partnering or having their partnership dissolve a few years ago. This makes sense because we talked about last week, Amazon is revising or changing some of their fee structure for its third-party sellers. So if you're like me or any person out there and you're selling goods on Amazon, well, they've changed the fees to where you might sell or fulfill more stuff. So I list my product, like I'm selling these HUD phones, for example, on Amazon. And instead of sending them to Amazon and allowing Amazon to pick, pack, and ship them, I might warehouse them myself. And in that case, it might be nice to have a little bit more of a deeper partnership with FedEx or UPS or the United States Postal Service. They're also talking about maybe having returns go back to FedEx locations. Amazon's first spring sale event is already underway. This is not exactly like Amazon Prime Day, which I think is almost a twice a year event at this point. The big spring sale is open to everybody, even including people that don't have Amazon Prime. You're going to see 50% off select kind of spring stuff for outdoors, sporting events, things like that, and maybe an HD TV, because that's like right in time for March Madness basketball. I turn on my TV, which I've had for about 7 or 8 years now. Perfectly fine HD TV, and it completely crapped out right at one of the worst times. And you got opening day baseball, you've got the Masters coming, and you have March Madness basketball. And I'm going to have to go to Costco or one of these places, maybe Amazon, and buy a new TV. It's a bummer. Moving on to Netflix, start of the week at 611. This stock is so resilient, just sneakily, just continuing to climb week after week. Up over 2%, finished the week close to 625. Talked about this last week, how you had Paramount, ticker symbol PARA. It's one of the worst performing stocks. I think it's also one of the most shorted stocks when you have that environment. You have these beaten down stocks, but stocks with incredible assets. We're not talking about an asset necessarily in decline over at Paramount. It's just the way they're able to monetize it, and the traditional way of getting cable licensing fees and affiliate fees like that is just changing and shifting. We talked about how you could have some consolidation in this industry, not necessarily by Netflix getting away with that from a regulatory perspective, but there was a report that Apollo Management, which is a private equity firm, could potentially make an $11 billion offer for Paramount, which I think is about a $7 billion stock. Well, that shot the stock up early in the week. Maybe some tomfoolery happening as the deal and the stock ended up following on a report that the Apollo deal likely not to happen. It sounds like that Apollo does want to come to the table to buy Paramount, but Paramount might not be willing to sell the studio as a part of the deal, which I think is kind of a make or break deal if you're going to buy Paramount. Moving on to NVIDIA. Start of the week at 920, slipped down a little bit, all the way down to 855. Rebounded nicely as the chip maker up over 2.4% to finish the week in the $940 range. Their conference kicked off this last weekend. Really wanted to go to this, didn't end up making it, but they unveiled their new GB200, which is the follow-up to the obviously H100 device, which has just been absolutely amazing. The GB200 obviously packing more performance, but I think more impressively doing it at a slightly lower power draw as well. So that's absolutely fantastic. They also had a lot of news. We'll also see this when we get to Microsoft, as you have these AI-powered computers, as you have a refresh cycle likely coming, as most people got new laptops and computers right around the pandemic time, as people started working from home, even a lot of companies offering subsidies or a couple $100 credit or whatever, maybe a new laptop. You're on kind of the 4-year, almost 5-year time frame there. It's almost time to refresh those devices, and AI-powered computers, definitely the rage. Saudi Arabia planning to pour $40 billion into AI technology. Certainly good for the chip makers as well. High bandwidth memory, HBM. These chips are going into each of these NVIDIA devices like the H100, the GB200. They have I think 30 or 40 of these HBM memory in there. NVIDIA looking to Samsung to source some of that, largely because their primary supplier, Micron, surged past its year 2000 high on the backs of HBM memory, absolutely flying off the shelves there. In fact, the CEO, I think, said it was sold out through 2025. Subscribers to the Exponential Report, which is our paid service that I am a part of, we recommended a high bandwidth memory test maker. This was last year. We saw this trend coming, and needless to say, that stock has skyrocketed. Moving on to Google. Started the week at 150, ended the week roughly flat after falling like most stocks earlier in the week. We talked about this when we talked about Apple, is that Google's Gemini could be powering the AI features on the iPhone. I think this is a great deal for Google, whether they got to pay up or for some reason Apple actually has to pay Google, which I think would be a ripoff. But I believe this kind of knocks down the competitive moat that Apple has. Look, Google's phones. I'm going to be near the Google headquarters here in a few hours. I tell you what, their phones are pretty darn good. Would I buy one? Not necessarily. But these days, it's a camera, it's a speaker, it's a processor, and it's a screen. There's not much differentiating anymore between these phones, and if Google is powering the AI on Apple's phone, it just makes their products as well equally as alluring. Now, hamburger deliveries by drone, that sounds terrible if you ask me. DoorDash and Google's Wing unit, which is a kind of a drone delivery business unit within Google, and Wendy's are going to try to make this happen. So you got a 3-way partnership to deliver hamburgers. I can't think of anything worse, guys. You've got a hamburger, you're going to send it up in the air, that thing's going to fly, 20 or 30 miles per hour, get blown by air. When you get there's nothing worse than a cold hamburger. I mean, it's one thing, cold pizza or a cold sandwich or something cold. A cold hamburger just doesn't appeal to me. There's only certain types of food that I think travel well. Hamburger is not one of them, but this obviously is the future in some ways in terms of food delivery or delivery in general. Moving on to Microsoft, start of the week at $417 and some change, up over 2% to finish the week, close to $428 per share. Microsoft is introducing its first Surface AI PCs. Now, a lot of AI, we'll put this in air quotes, guys, AI PCs are going to be advertised. More or less, these are going to have a button on the keyboard that brings up some kind of Copilot thing. Maybe on the microprocessor, there is a little bit of hard-coded AI stuff in there. But a true AI PC, I don't think has happened yet, or even a true AI device hasn't really come to mass market. That is where the operating system is an AI model. So instead of running Windows or running iOS or running Android, you're actually running like ChatGPT as the operating system or something like that. Now, obviously, a lot of things need to happen for that to materialize, but these AI PCs, they're going to call them AI PCs, but I don't think we've truly seen a true AI PC quite yet. And I think when they do come, they'll be a very, very compelling product. AI startup Cohere attempts to raise an evaluation of close to $5 billion. The company makes AI models in partnerships with many others. $5 billion, pretty good valuation. Now, OpenAI may release a new GPT-5 AI model in the next couple of months. I saw spring, summertime as the timeline for this. Certainly will be interesting to see the leap. Will GPT-5 be a giant leap or just a small leap in large language models? I think we're getting to the point where you had Anthropic release Claude, I think a week or so ago, and even Gemini, where it has certain updates where it's not mixing up the race of the founding fathers and making silly mistakes like that. I think what we're seeing is they're just getting incrementally better. Is OpenAI able to make another leap forward with GPT-5, or is this going to start to look like the iPhone, where there's not much difference between the iPhone 15 and the iPhone 14. Maybe it's a small pixels on the camera, or maybe it's a speaker, or it's a screen size or something like that. Can we continue to see giant leaps in capabilities for these models? If OpenAI is able to do that, oh my goodness, they will kill the competition. Microsoft bringing a new executive to run its consumer AI unit, bringing on Mr. Mustafa Suleyman and others, as Suleyman previously founded DeepMind, which was bought by Google. So they're bringing in some heavy hitters over at Microsoft to run their unit. They must be paying up some big bucks for that. Moving on to Tesla, start of the week at 167. I am recording this during the trading day. Still 3 hours to go or so. Well, Tesla might end up the week higher this week as shares are close to, as Elon Musk would approve, close to 169, up about 1.6% on the week. Tesla, though, is down 30% this year, but bulls are still looking at that long-term upside. So you have the energy business, you have the robotics business, maybe you have the Cybertruck in full production, things like that certainly can bullish. You've got potentially maybe a $25,000, $30,000 car, although you can go get a used Model 3, I think, for less than $20,000. So I actually don't buy that Tesla puts out a $25,000 car and that solves all their problem. They already have a $30,000. They already have a car that you can buy for less than, and now it's not a brand new car, but I don't think that's going to make a difference from a demand perspective. Tesla already has an affordable car on the market. You can get used Model 3s for, I don't know, $20,000, $25,000 all day long. The upside's going to come in the energy and the energy storage business. And if somehow they can get that robot, and I think it's full self-driving, but not at the price point that they have it at. They have it at just a ridiculous price point that even very affluent people with lots of money, I would never even think about paying $15,000 or $12,000 for full self-driving at Tesla. But if they made it $49 a month, oh my God, how many millions of Tesla drivers would upgrade for $49 a month? I think they could bolt on a ton of money to the bottom line if they wised up and stopped trying to charge $15,000 for a piece of software. Tesla curtails its EV production in China amid slowing growth, and it looks like that employees on the factory line have not given any indication on when that demand will bounce back. Looks like you're having some tough times selling these EVs. That is a fact. And I think you have some tough economic times in China as well. Some good news for Rivian owners is they'll now be able to charge their cars, their beautiful cars. Rivian makes some really pretty cars, and they're going to be able to charge those at the supercharger stations. Probably the best product. Honestly, the best product that Tesla has is its supercharger stations. Now, Tesla's going to raise the price of the Model Y in the United States by $1,000 and in parts of Europe by about 2K euro. Maybe this is a sign that these cars are selling relatively well here, or maybe it's a sign that demand's not where it needs to be. And but the people that are buying these cars are less price sensitive than Tesla needs to be. Obviously, a drop in interest rates would help Tesla immensely. Moving over to the technical segment of the show where we look at lines and graphs. And I tell you what, S&P 500, my goodness, guys, this is as steep of an uptrend as you possibly can see. We more than confirmed a higher high over the previous highs. Pullbacks at this point are expected, but man, sometimes you bust to these all-time highs. This is when it makes the press release. This is when, not to the people viewing this video, okay? Because I wouldn't consider, if you watch this video and you would watch this channel even on a semi-regular basis, you are above a retail investor, but there's a lot of people out there that care more about what's going on their social feeds or what's going on at work or their family, and they barely ever check in on the financial markets. Well, this is when they pile in, and this is when they check things out, and sometimes you can have this blow-off move. I mean, look, we've kind of seen that before. S&P 500 made highs all during the 2018 time. You had that pandemic crash, and then you had a boom, just obviously a resurgence, a lot of it having to do with stimulus money, PPP loans, and other government stimulus. But I tell you what, you could have the stimulus of lower interest rates coming. I mean, Jerome Powell all but said that he is desperately wanting to lower rates. You could have a continuing move to the upside. If you do that, obviously, I think you profit take. Any pullbacks in these markets should be purchased. Moving over to Meta, trying to hit that delete button. Meta's looking fine, still making higher highs. We did not confirm with a higher high today. It's actually one of the first times that you are not able to do this. I know I am recording this during the regular trade, but I don't see Meta going from 515 up to 530 by the end of the day. I guess anything is possible. So you had a little bit of a flattening out. Now we're looking at a really micro trend. You could come back next week and just continue to push higher in this stock and nobody would know the difference. But if this is a topping pattern, pullbacks in Meta, especially filling the gap down to 400, should be purchased. Moving over to Apple, did not get out of the micro technical pattern that we've been making. Notice that in the shorter term, really since actually the beginning of the year, you've been making lower highs, lower lows. It was actually confirmed this week. You had a little bit of a rally off the lows for Apple, pushing you back up to 178, 179 on the share price, and it got rejected at that area. And it looks like we're pushing lower on the iPhone maker. This area down here is pretty resilient. Down here at 169, wouldn't blame anybody for wanting to step in there. That is your area of support. Although you do have kind of a double top formation, shorter term downtrend. More patient investors, I think, wait to see if you dump the bottom on Apple. You dump the bottom on Apple, you've got, boy, there's a lot of room down below. We got a gigantic green box there. We'll have to tighten that up if that materializes. Moving on to Amazon is in, other than maybe Netflix, is in the most beautiful uptrend. This one continuing to rocket higher. We're pushing up, back up to the all-time highs. Should have some selling pressure, about $10 higher on Amazon. That's your spot if you're, if you were lucky enough to get into, or maybe not luck is the word, maybe smart enough to get into this one numerous times. I mean, we still got our green box down here. It turned out to be an excellent spot. We don't put these in after the fact. You can go back to the videos a year ago. These green boxes are in there. Approaching up here at 189. That's an area where you could take some chips off the table. But everything looks like a tailwind for Amazon. You don't have earnings until next month, towards the end of next month. Third week of April is when you'll have earnings for pretty much all of these companies outside of Netflix, NVIDIA, and Tesla. And if Netflix earnings, or excuse me, if Amazon's earnings are anything like they were last time, where they produced tons of operating profit, this stock is probably going to continue to higher. Now, speaking of higher, Netflix is literally the most resilient stock of this all. Very similar to Amazon. Looks like we're making a destiny run up here to $710. And again, these prices are moving around because I am recording this at about 10 a.m. Pacific time during the trading day. We close about 1 p.m. here on the West Coast. NVIDIA looking like it wants to try to find some footing, maybe push back to the all-time highs up to close to 1,000. Any weakness in this stock, any weakness at all, even like a 50-cent weakness, has proven to be a buying opportunity. Speaking of buying opportunity, excuse me again, not hitting the right buttons. Google made this is a beautiful pattern, okay? It's not hitting the technical marks to the dollar, but this is a beautiful uptrend. And this just extends off the uptrend that you've really been in since, I would say, the uptrend's been confirmed since February of last year. It's just extending it. It's flattening out a little bit, looking a little Netflix-like, maybe even a little Amazon-like. This looks beautiful. Looks like to me we want to poke up here to an all-time high, 157, pullbacks in Google starting at this brown line, which if it happens over the next couple of weeks, take you back down to 140. That should be bought. Moving on to Microsoft. Just looks so good. It's super steep. It flattens out, and then it just reaccelerates to the upside. Weakness in Microsoft also should be bought. And now Tesla is in the most precarious position and the most different position than all of these stocks. First of all, you've basically been going sideways on this stock for virtually 4 years. Now, the sideways consolidation is between 100 and 400. Probably more specifically, you're looking at consolidation between roughly about where the stock is right now, 160, 170, up to about 300. So it's a wide range. It's volatile. It's got some high beta. But in the micro trend, we've been making lower lows, lower highs, could not even get past the middle of the technical range. That means we're making an Apple-like steep downtrend. You'd like to see Tesla poke out above this before you really step in here in a major way. This one looks like it wants to make a beeline. We talked about how you've got levels from where the stock is at 160, 170, all the way down to about 100 on this one. Those of you that buy into the long-term story with Tesla, long-term thesis, well, these are your buying opportunities. And over the past 4 or 5 years, anybody that has picked the stock up south of 160 has actually done relatively well, at least on the rebounds. Folks, that was FAANG Stock Recap Show for March 22nd. I hope you have a wonderful day. Enjoy the basketball and enjoy baseball season kicking off, I think, next week. And we will see you then. Until then, have a great weekend and good luck with your investments.